Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, let's take a look at the crypto market and what's happening with the prices. Bitcoin continues to pull back. It had a pretty good pump, a green candle forming on the daily chart, but now a red candle is forming here. But as we've been talking about, we are due for a pullback, a correction. Bitcoin was overbought, overextended. So we're having a cool down period. So we got to let it settle, find its support, and then bounce and keep going upwards. So no need to panic, no need to worry. And one of the key indicators we've been looking at is the DXY, which continues to look strong, green candles on the daily chart. So if that's going up, risk assets like Bitcoin will continue to go down. So this is true for the altcoins as well. The altcoins are seeing some pullback. And here's what Rect Capital, who does some great analysis, who puts out a great chart here showing that Bitcoin historically has had pre-halving retraces, right? Where you have the corrections before we keep heading upwards. Now, Bitcoin is ahead of schedule, but here's what he posted with his respective chart. In 2 days, and this was posted today, Bitcoin will officially enter the danger zone, which is the orange area in the chart here, where historical pre-halving retraces have begun. Historically, Bitcoin has performed pre-halving retraces 14 to 28 days before the halving. In 2020, this retrace was minus 20% deep. In 2016, this retrace was minus 40% deep. Currently, Bitcoin is 30 days away from the halving and has pulled back 11% this week. So, folks, we could expect something between 20 to 40%. My hope is it stops at 20 or 25, right? We don't keep going lower, but that's okay. From a macro standpoint, we know we're headed to higher highs and possibly a blow off top this year, if not next year. So we got to be patient and let the market cycles play out here. Bitcoin has to do its thing. And we know the liquidity flows from Bitcoin down to the altcoins. So if you look at the total market cap, excluding Bitcoin and Ethereum, red candles forming, right? Normal here. Obviously, though, Solana has been ignoring a lot of this, although on the daily chart, it is forming a red candle. It has been ignoring a lot of the market cycles, both from a micro and macro standpoint. And we saw this with Chainlink in the last bull market. And many of you know I had swung trade Chainlink in 2020 and made some nice profits. So Solana continues to go crazy, but cooling down, it looks like here. And we'll see what this week brings us. But guys, we're still on track. And even here, Rect Capital highlighted the following altcoin chart, saying the altcoin market cap retest is still in progress and successful thus far. Once again, pump, cool down, build support levels, then pump higher. So that's what I'm anticipating. That's what I'm looking for. Nevertheless, guys, you know the Bitcoin ETF issuers are going to buy up as much Bitcoin in this dip as possible. Here, Nate Garachi of the ETF store, president of the ETF store, said 2 spot Bitcoin ETFs now in the top 6 of all ETF inflows this year. IBIT, which is BlackRock at 3rd, and FBTC, that's Fidelity, at 6th. That's out of 3,400 plus ETFs. Other 4 ETFs include 2 S&P 500 ETFs, the VOO and IVV, Schwab US Dividend Equity ETF, that's SCHD, and Vanguard Total Stock Market ETF, VTI. So incredible performance on the Bitcoin ETFs. And this is just 2 in the top 10 here. You have 8 others, right, that are still dominating and accumulating billions. It's incredible what's happening. So like I said, guys, they're going to buy the dip. So I'm going to see if I'm going to buy the dip here. I haven't been buying because I took my positions in late 2022 and then early 2023 when we were in the bottom zone, the max pain zone. So I've actually been taking profits. Like I took profits on fetch.ai, which was one of the big bets I took for AI coins, and that paid off really well. And I'm of course waiting for new all-time highs for other altcoins and for Bitcoin to cross for Bitcoin to hit 90K, that's when I'm going to start taking profits. And then after 100 and 110 and so on and so forth. Hopefully we make it to that. So exciting times still ahead. Now let's take a look at what the top trending tokens are on social media. This was updated 5 minutes ago from Sentiment, which is a great partner of the podcast. Of course, Comes with no surprise. Solana is leading here with good positive sentiment. And coming at number two is Solidus AI Tech. And the ticker symbol is AI Tech. I have not heard of this token. The sentiment is heavily neutral, though, 57.33%. So maybe it's some new token that's launched. I'll have to investigate this and research this. Napoli Fan Token, or NAP. I've not heard of this, but this is at number three. Salama. So not to be confused with Solana. This is a meme token. You just swap out the N with an M. So it's a llama essentially in the logo. These meme coins, what do you guys come up with this stuff, man? It has neutral sentiment at 66%. That's the leading sentiment indicator there. Boom, Book of Meme comes in at number five, still strong with positive sentiment. Then you have Radium. I've actually not heard of this. It has negative sentiment, leading with 42.72%. Then you have Ampleforth. Never heard of that. That comes in at number seven. Then you have Render. I'm a big Render holder and fan. The Render and Fetch.ai were my two big AI bets, and they paid off really well. That has good positive sentiment. Ethereum comes in at 9 with high positive sentiment. And BlockNet comes in at 10, but still has strong negative sentiment at 47.32%. So those are the top trending coins, guys, on social media, top 10, that is, that are getting the most mentions. Now, quick word from our sponsor, and that is VeChain. And I'm super bullish on VeChain. I've been holding the VET token for years, since 2018. I'm a big believer in this project. They are building incredible solutions for Web3 and doing all kinds of great things with different brands, such as BMW, PwC, Walmart China. They're also working with Boston Consulting Group, building great decentralized apps and different ecosystems. This blockchain has great performance, great speed and security, and it uses less energy than many other blockchains out there. It is an enterprise-grade blockchain. And like I said, I put my money where my mouth is. I'm a holder of the token. I believe in this project. They're doing a lot of things with sustainability projects, also tracking and tracing for merchandise and manufacturing and so forth, supply chain management and all those things. So if you'd like to learn more about VeChain, visit vchain.org. Link will be in the description. Now, guys, we got some not so good news coming out about Starbucks and NFTs. And let me preface the news by saying many NFT projects from big brands did ramp down because there's not regulatory clarity. Remember, the SEC went and sued Stoner Cats and other projects. It's ridiculous, right? So many of these big brands are not going to go full force until there's clarity. So we're starting to see some sunsetting of projects because there's a lack of clarity from the SEC. So here's the headline from Blockworks. Web3 Watch, Starbucks shutters its Odyssey NFT program. So, major coffee retailer Starbucks said Friday afternoon it will be ending its NFT-enabled customer loyalty program dubbed Odyssey. The program will close on the last day of March. The Starbucks Odyssey beta must come to an end to prepare for what comes next as we continue to evolve the program, Starbucks said in an update to its program's FAQ page. The NFT customers could earn through Odyssey called stamps will be transferred to the NFT platform Nifty Gateway, where they can continue to be bought and sold, Starbucks added. So they're not sunsetting it entirely, but they're making some changes, but still, it is very risky out there for any brand to do these things because scumbag regulator Gary Gensler may come after you and say, "Oh, that's a security," and then sue the hell out of you, right? And if you get sued as if you're Starbucks, Gary's going to try to get the biggest fine possible and get the headline, and then go on CNBC and say, "See, I told you guys these things are securities," right? So we know he's going to do that. So this is why we need crypto regulations. We need to kick Gary Gensler out. We need to kick out Elizabeth Warren, vote for John Deaton, and we got to keep fighting. We got to call our representatives and do much more because this is ridiculous. It's the latest in a growing trend of non-crypto companies sunsetting NFT programs they started a couple years ago. Video game venue GameStop shut down its NFT marketplace in January, citing regulatory concerns. Also that month, social media platform X discontinued support for NFT profile pictures. Ex-competitor Meta wound down its own NFT program earlier in 2023. So guys, my thing with NFTs is that it has to have utility. And I do believe these big brands were trying to do that. but it's crawl, walk, run. They have to go through all the phases and test it and make sure it works. And the consumer has to be educated. And the user experience for the consumer has to be frictionless. It has to be easy. It can't be complicated. But what doesn't help is you have this black cloud coming from the SEC that they may sue the hell out of you, right? So this is the problem, but it's not over. It sucks that this is happening, but it's not over. As we get clarity, these brands are going to open up more and release NFTs, and I believe those NFTs will be much more than collectibles. They will have utility, and I'm super excited for dynamic NFTs where they're programmed and they change and they can do things based on external changes in the world. So all of those things are coming. They're being worked on, but we got to get the clarity. Now, we got some funding news, guys, that I want to tell you guys about. Here, Blockworks aggregated the funding news saying gaming continues to draw investor intrigue. So, guys, I think GameFi and Web3 gaming is going to be big. I think it's going to be another narrative similar to AI, where the gaming coins could do well. I'll let you guys know which gaming coins I do take a position on. To be quite frank, I have not taken any positions. I've only betted on AI, but I don't want to miss the next trend, right? And this, even if this cycle it's not the most prominent narrative, I think in the future cycles it will, because gaming is not going to go away. Gaming exists in society, in the world, and people play games. And if they can be rewarded with tokens, that's a strong incentive that will continue to drive user adoption, because they can earn a living, they can make extra money, whatever it may be. And obviously they can use the tokens within the games, right? But recently, and I published this interview yesterday on Saturday, my interview with David Johansen, CEO of Blocklords, which is a video game, and they have an in-game token with an in-game economy, and there's going to be a token drop, and the token is LRDS. And we talk about the future of GameFi and the industry and so forth. So this is something to pay attention to. Like I was telling people about AI tokens in December 2022, that video didn't get millions of views, but those who listened and took a position, they're probably doing really well right now. So you got to pay attention to these trends. Obviously, only invest what you're willing to lose. There's no guarantees here. And don't spread yourself too thin. Don't invest in 50 tokens, right? Definitely, if you can, maybe you get into one AI token or one GameFi token, you diversify that way, because we see there's strong narratives around them. So once again, be sure to check out that interview with David. And you guys, it was literally published yesterday. So let me give you the details here. Web3 gaming startups not named Axie Infinity don't tend to pull show-stopping funding rounds, but there's a fairly constant trickle of investment into various games and developer studios. That trend continued this week as a host of companies integrating gaming with Web3 announced funding rounds. Gaming studio Carbonated announced $11 million in funding this week alongside the early access playtest of its NFT-enabled mobile shooter game Mad World. The round was led by South Korean gaming firm Com2US. So you see the gaming industry is investing in these Web3 gaming startups. And David and I spoke about that as well. They are paying attention. So the makers of Call of Duty and whatever game, they are looking to integrate the tokens, because that's the future we're heading to. I've been telling you guys for years, we're headed to the token economy, everything running on the blockchain, and tokens being part of different ecosystems, and they have interoperability. And the important thing to take a look at, in addition to the gaming tokens, is what blockchains they're built on and hold the tokens of those said blockchains, right? So Mad World is set in a post-apocalypse world where gamers battle to control plots of land tokenized as NFTs. A16Z participated in the round and also invested in Carbonated in 2020. So you see the big hedge funds are putting capital here. The developers of the massively multiplayer online game Metacane or Metacene announced a $10 million Series A round with participation from the Spartan Group, Animoca Ventures, and others. This follows on $5 million in seed funding Metacene raised in July 2023. The Singapore-based gaming company boasts many of the typical Web3 gaming integrations alongside social guild DAO governance. The game is still in alpha testing for whitelisted participants. So as you can see, we're still early. They're raising funds, right? They're going through multiple seed funds, and they're still in beta, alpha testing, and so forth. So it's still early to get in here. On the infrastructure side, Blockus raised a $4 million pre-seed for a service helping game developers add blockchain-enabled features. Blockus participated in A16Z's crypto startup accelerator, though the VC did not apparently participate in the round. Now, Eclipse hauls in $50 million for modularity. The potential of modular blockchains is a buzzy topic among developers, and one firm cashed in on the concept this week. The modular layer 2 blockchain Eclipse raised a $50 million Series A. Blockworks reported, Placehold Ventures and Hack VC led the round. Other notable raises include ZK proof-focused infrastructure firm Polyhydra raised $20 million at a $1 billion valuation. Steve Cohen's Point72 Ventures led a $10 million round in D2X, which is launching an EU-based derivatives exchange. Data computing for blockchain startup Click announced an $8 million Series A, and Web3 social platform UX Link raised $9 million. Folks, if you are an entrepreneur, you have an idea, now's the time. Go get that capital, right? And even you could come work in the crypto industry. We are heading back into the bull market. We're much more mature now, obviously, and there's more capital coming in, and we're at the cusp of crypto regulations in the United States. So, guys, I hope you see the information I'm providing here and how you can use that to your advantage. So check out those game tokens. I'll let you know which ones I take a position in. Obviously not financial advice. I'm telling you to go do your own research and your reading up as well. That's important. And then pay attention to the moves being made by big money. And I'm here to make money, folks. Make no mistake about it. I believe in the technology. I'm passionate about it. But number one is to make money, because I'm trying to give myself and my family financial freedom. And we do have to exercise patience. We do have to look at the charts. We have to look at the cycles. This is why I created this podcast, to bring that education aspect. I'm not only looking at the charts, I'm looking at the investments and the news and the fundamentals and the regulations. I'm trying to give you a holistic view, right? Because all of these things matter. But exciting times are ahead. We are still in a bull market. Don't worry about the pullback. This message is more for the new people in the market. It may be their first rodeo and they're a bit scared. But those are my OGs who've been listening to me. Some of you have been listening to me since 2018, even late 2017 when I started the podcast. And I appreciate your support. And those of you who have been around with me, I hope you've been making money over the years and that you make a lot of money this cycle. And I've been always upfront about why I created this podcast. I'm not here for conspiracy theories. I'm not here for fairy tales. I'm not here for nice stories. I'm here to make money. And I hope all of you make a nice return this bull market, folks. Let me know what you guys think about this news. Leave your thoughts and comments below. Hit the thumbs up button. Hit the 5-star rating on the podcast platforms. Folks, if you haven't as yet, sign up for my free email newsletter. Link will be in the description. It's on Substack. Also, follow me in all social platforms: Facebook, Instagram, TikTok, X, LinkedIn. All the links are in the description, guys. It really helps. It doesn't take a dollar out of your pocket. I'm not asking you to buy anything. I'm just saying follow me, subscribe. That's all. That really helps, because it helps increase my reach, my content's reach, and for the podcast to grow. It's simply that. So thank you so much, guys. I appreciate you all, and I'll talk to you all later.